Palantir's 80 times PE is pure nosebleed. Now, first off, listen. It's very easy. Whenever a stock is trading at a multiple significantly above where the market trades at, it's very easy to say it's overvalued, it's a ripoff, sell the stock. That's always going to be the easiest avenue to take. Always. And the reason being is you don't then have to run projections. You don't have to project out numbers. You don't have to run numbers. You don't have to do math. You don't have to do any of that. You don't have to think about, well, how does a stock like this in this sort of space usually trade at, given these certain growth rates versus another stock. If you want to actually know if a stock's a ripoff or a great deal, you have to actually run numbers. You have to actually spend time. You have to actually do math. I wish it was as simple as, I don't wish it was as simple because then everybody would do the stock market. But if it was as simple as just the stock market in general trades at a 20 PE, this one trades way above that, it's a ripoff. If it was as easy as that, everybody would do stock market investing and everybody would get these incredible returns, right? It's not as easy as that. It takes a lot of work to really understand, is a stock a great deal? Is it a ripoff? Those sorts of things, okay? So this individual, they make an argument, Palantir's 80 PE is pure nosebleed. Palantir is up over 37% since my last coverage after it reported outstanding Q2 fiscal year 2024 results, with revenue and earnings beating estimates. With strength in U.S. commercial segment from unrelenting AIP demand as it closes record number of $5 million and $10 million deals and is unlocking operating leverage. However, with its recent addition to the S&P 500, I believe the stock has gotten way ahead of itself when taking management's fiscal year 2024 guidance and consensus estimates thereafter. With Palantir commanding the highest multiple in the SaaS complex, there's more downside than upside in the short term. Therefore, I'm downgrading my rating to sell with a price target of 27. Okay. First off, there's a potential that Palantir could ride all the way up to 40, going into S&P 500 inclusion, and then there's like a big downfall that happens for the stock down to like $34. So it's something like to take into account that could happen. I'm not saying that's going to happen. We'll speak more about the stock price a little later on, but you always got to keep that in mind when somebody puts a sell rating on, because it's a dangerous one to put on, because like Palantir could run to like 40 plus here in the short term, and then you're going to look really, really wrong. And then if it even drops after that down to 34, you still look wrong in the end, right? Because it was like, what was this all for? You got to kind of be banking that Palantir is going to go down to $27 or something like that, right? And I even look at, obviously, Palantir's a stock that has been tremendous for me. I've made it's a large amount of money, $150,000, something on the stock now at this point in time, right? And it's done me very well. And so even I look at it and I'm like, maybe it is a good time to sell the stock, right? Well, here's kind of a little deeper thoughts around this, right? So Palantir, forward Ps, 2-year forward Ps, we're looking at 1000xstocks.com. There's no doubt it's way above the market, right? But you got to keep a couple things in mind here. One is, whenever you see a company trading above a market multiple, you got to say how far above a market multiple is. So in Palantir's case, let's say it's about 4 times market multiple, right? So I have to then look at the industry it's in, right? The sector it is. It's in the SaaS space. So SaaS companies always command a much higher P ratio than an average company. That's just the way it is. Those are the holy grail business models. Their margins are incredible. They're very sticky business models. They have many times the best of best customers. So SaaS related companies usually going to trade big market multiples over the market, right? So we can say, okay, if it was trading at 4 times maybe an average stock, it's SaaS, so let's say it's maybe 3 times. So then we can say, okay, is this company's earnings per share growth and revenue growth at least 3x, let's say for instance, an average stock, right? Well, if we think about kind of average stocks and we think about where Palantir is at, next year earnings per share growth for Palantir expected to be 48%. Many stocks are kind of in the 8 to 12% range, so we're talking, at least 4x here, right? Next year, revenue growth expected, analysts are kind of at about 20%. I think that number's really low. I think it's going to be significantly above that. But if you look at many stocks, they're kind of in that 4.5 to 6.5% range. So we're talking around a 4x as well. So if you've got a stock that, let's say, is around 4x the valuation of an average stock, right? And they're doing about 4x the growth rates, well, is it really that rich then? No, it's actually fairly priced, right? It's actually fairly priced. Now, if you say it's really about 3x because this sort of company is going to always command a much higher PE than the market trades at, then you can make actually an argument that Palantir is undervalued today. Undervalued. This is where it starts to be very interesting to run the math and start to run numbers around this, right? As with many things in life, the easiest decision is usually not the right decision. The easiest decision is to say Palantir trades way above the market, so it's a ripoff. When in reality, you start running some projections, you start running some numbers, you start thinking about this logically, and you start to understand, oh, maybe it's not that. And I understand, like when I first got in the market, I thought the same way a lot of people think, like, oh, this stock trades at a 30 PE, it's a ripoff. It's a 40 PE, it's a ripoff. The market trades at 15. Oh gosh, this is ridiculous, right? I thought the same way. And I learned kind of Warren Buffett philosophies, right, about value investing. Ben Graham, right, Intelligent Investor was one of my first big investment books I read. And that works for value investing, but growth investing is very different. Palantir is not a value stock. Palantir is a growth stock. The growth rates this company has is exponentially better than value companies, right? This is no Coca-Cola, this is no Pepsi, this is no McDonald's stock. This is a whole different animal here with whole different growth rates and whole different margin profiles, right? And so you have to treat these sorts of companies. So when I first got in the market, in my first few years, I started looking into Amazon. I really liked Amazon. I was like, man, there's this AWS thing that looks interesting. Mainly, I was thinking about it from the e-commerce side. And I just knew as somebody that was a young person at that time, right? I was like, this e-commerce is going to be huge. Like everybody's going to be ordering stuff in the future from Amazon, right? And I was right about that. But I wasn't able to get in Amazon back in those days. I wasn't able to build Amazon into a big position until the 2022 drop, right? Because back then, I looked at Amazon when I was first getting in the market back in 09, 2010, 2011. I said, Amazon, the PE ratio is ridiculous. Like Amazon back in those days traded at PE ratios like in the hundreds or something insane. And so I was looking at it and I'm like, that's ridiculous. Walmart trades at a 20, right? And so I couldn't do it. And ultimately, I just didn't understand how to actually properly value growth stocks or be able to look at something like this on an educated level, right? Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are three main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there. Now, let's run some projections here. So if you run, 27% revenue growth on average for the next several years, which I think is very doable for Palantir. I certainly don't think it's a guarantee, but it is definitely a doable number. And they could do net income growth of about 45% a year, which is also doable given that they're getting more and more operating leverage in this business model as our revenue continues to go up. They would put them at net income margins of about 37% in 2028, which would be very, very high, but I think it is possible. Now, if you value the company at just a 20 or 30 PE, sure, the stock looks like a ripoff today, right? But why would a SaaS company growing revenues at 25% plus, growing net income at 40% plus on average, why would it command a 20 to 30 PE? That doesn't make any sense. People wish companies like Palantir traded in the 20 to 30 PE range because that would be more in line with the market multiple. But why would a company that is far superior to the 99.9% of companies, why would it trade anywhere close to a 20 to 30 PE? That doesn't make any sense, right? So we got to run some more realistic projections here. So let's say we run the same numbers, right? 27% revenue growth on average for the next 4 years, 45% net income growth over the next 4 years on average, right? But we run it at a little bit more of a realistic P ratio range, right? So for this one here, we're running a 50 to a 70 P ratio, right? Which is about 2.5x to 3.5x, let's say, an average stock in the market, which is actually much more realistic for a company like Palantir that would be growing at these sorts of growth rates, right? This means a CAGR, compound annual growth rate, on the low end for Palantir would be around 14%, and a compound annual growth rate on the high end would be about 24%, right? Now you got to assume that if Palantir is really piling up that net income, they'll probably do share buybacks. That could honestly help their earnings per share as well. So that's something that does, you got to think about there. Is Palantir likely to dilute shareholder value over the next few years? No, not in any significant way, right? If anything, they're likely to take shares off the market. So that could even help earnings per share as well. So when you begin to look at it like this, you begin to understand something very important in regards to Palantir. Palantir does not trade cheap. Palantir is not going to trade cheap for a long time. And you either have to be willing to accept that or not accept that. Because the bottom line is, if you're hoping Palantir is going to trade at some 20 to 30 PE, it's not happening in this decade likely. You might get that opportunity in the 2030s in regards to Palantir if they have much lower growth rates and things like that. But you're likely not getting this company for a 20 or 30 PE in this decade, because the growth rates are so much better than an average company, right? And because they are so well positioned in the marketplace compared to almost anybody else. So when you have a company that is perfectly positioned with the perfect products and services in a marketplace, right? Additionally, the growth rates are significantly above average companies. You're not going to get the company at any sort of normal growth rate anytime soon. Or excuse me, at any sort of normal P ratio anytime soon. You're gonna have to pay up for a stock like this. This is premium quality, right? This is this is like a Ferrari of the stock market. And guess what? You might look at a Ferrari, you might wish you could go get a new Ferrari today for $30,000. Like, man, why can't I get a Ferrari? Like, I can go get a Honda Civic for $30,000. I can go get a Honda Accord. I don't even know if those are still $30,000 for $30,000. Why can't I get a Ferrari for $30,000? I want a brand new Ferrari for $30,000. Why do you think you can't get a Ferrari for $30,000? Like you got to wake up at some point in time, because it's a premium car. Palantir is a premium stock. You're not going to get it at the same valuation that you're going to get Pepsi and Coca-Cola and McDonald's. You have to wake up at some point in time and realize that, right? Like, the more you start to think about it, the more you start to say, this is actually common sense. This is common sense to begin to understand this, right? And a lot of people, unfortunately, don't have common sense, so that's a whole other subject there. Now, if we want to run Palantir at some higher growth rates, right? Like Alex Karp has always talked about, before the whole 2022 interest rate hikes and all that happened, right? Alex Karp always used to talk about, we're going to grow 30% plus on average a year, right? And obviously, when the Fed raised interest rates, that changed everything for a lot of companies, right? It very significantly hurt a lot of companies' growth rates, and Palantir was just one of many companies that growth rates obviously plummeted in 2022. But let's say they get back to that 30% plus growth, which honestly, if you look at the growth rates this company has been putting up, they've just been going higher and higher and higher and higher. So I don't think it's impossible for the company to get back to like a 35% growth rate, right? Especially with AIP and all the excitement there. And all the deals are likely going to close for this next bit of time. So let's say they do like 35% on average over the next few years. That would be able to bump them to at least, I would say, 50% net income growth on average over those coming years. So we put them at a net income margin of about 33% here, which is a little under Mr. Softy. I believe Microsoft's somewhere around a 34% or so, right? Now, 50 to 70 PE ratio, which honestly is low. If Palantir's growing 35% top line, 50% bottom line, for a company that's put into the SaaS space, 50 to 70 is way low. You're looking at likely 100 plus. But we're going to run 50 to 70 here. They'll give you a compounding annual growth rate on the low end of about 18%, on the high end of about 28%, right? So this wet dream, can we call it, of people wishing Palantir would trade at that 20 to 30 PE, it's not happening. It's not going to happen. And so if you're looking at Palantir stock and you're thinking, is the stock a buy, a sell, you've got to look at it further out. You've got to think about, what are the realistic growth rates for this company over the coming years? When it comes to revenue, when it comes to net income, do you think they're going to dilute shareholder value over the next few years, or do you think it's more likely they're going to take shares off the market in the next few years, right? Do you think they're likely to come out with any future game-changing products and services over the next few years? Their next AIP, right? Something like that. How much money do you think they're going to start to make from that? How well positioned? Do they have any competitors that are really on their tail? Doesn't seem like it. And so it seems like, if anything, they're building a bigger moat around the business right now, which, if you got the bigger moat you have, along with being a SaaS company, guess what? You command even a bigger valuation. And you tack on great growth rates that are way above market growth rates, suddenly you have a stock here that's going to trade rich for years to come. Years and years and years. It's an Amazon phenomenon. Amazon's always looked rich, right? I think right now this is probably the first time I've ever seen it where Amazon actually looks cheap on a P ratio basis, forward P ratio basis right now. But Amazon really, in its whole 25 years in the market, it's always traded, 25 plus years, I believe now Amazon's been public. It's always looked rich, Amazon. You know another stock that's always looked rich? Guess what it is? Tesla. Tesla's always been rich. The stock's always looked overvalued. It's always looked like a ripoff. People will always say it's a sell, right? And yet, has Tesla not been one of the best stocks in the stock market since it went IPO back in, 2010, 2011? Yes. Now, in regards to S&P 500 inclusion, that is coming September 23rd, 2024. So we can call that about 10 days from now, right? Now, I'm looking at options here in regards to Palantir, and it's interesting. So I was looking at September 27th expirations here, and it looks like if you want to buy a $35 strike, which right now the stock's $35.50. So let's look at $35.50. So $35.50, you've got to pay about $1.23 for that, right? I mean, I got to be honest, some people are going to look at that as pretty attractive still. And I got to say that actually leads me to believe there's probably a little more upside in Palantir stock in the very, very short term, meaning the next week or two, because I was expecting to see 35.50s at like $253. And the reason being is the stock has incredible amounts of momentum. We're about to get a rate cut, right? There's going to be that excitement of like, oh, we're in a rate cut cycle now. And you still have the S&P 500 inclusion coming. I would say there's a high probability that Palantir still probably goes up in the short term. And given that I think the premiums are still a little too cheap here, you might get some gamma squeezes as well, which bodes very well for Palantir in the short term. So, am I going to play it? No. I own my good chunk of shares, and a Palantir goes to $40 over the next few weeks. Great, right? But at the end of the day, I don't want to play that game of trying to time this one out perfectly in regards to options. I'm just looking at it. I'm just saying, I think there's a decent probability the stock still does go up in the very short term. We're talking here, right? Then after S&P 500 inclusion happens and you got all the funds starting to buy in, we'll see what Palantir is going to go in at. But if this baby keeps going up, I mean, it's possible Palantir goes in at a $90 billion or $100 billion market cap. It's possible, right? If Palantir keeps going risk on, next thing you know, the stock's 40 plus come September 23rd, which is a possibility, right? Man, I mean, that's going to be a lot of forced buying in Palantir when they actually get in the S&P 500. So I do think that's kind of interesting. Hey, it's Jeremy. I hope you really enjoyed that clip here today. Listen, there are three main areas a long-term investor has to understand. You have to understand financial statements, income statements, balance sheets, cash flows. You have to understand and master portfolio management. And you have to have the ability to project what is possible for companies in the coming years. Bearish scenarios, bullish scenarios. All these skills can be learned, and that's the good news. And I'm still just a regular guy who's out here. I just have a lot of passion for the market. I've learned a lot over the last 15 years. I had a tremendous amount of success, and I have a dedication to teaching people everything I have learned in the past 15 years. If I can do it, you can do it too. You can learn all that's required to become a great investor in my private group. The application is going to be down there in the description area. You can click on that, fill out an application, join us in the private group, get access to all my best course curriculums, teaching you everything that I got in my head, and you get ability to join our 6-figure, 7-figure Hall of Fame. We have such a tremendous Discord. It is incredible. So once again, description area down there, there's a link. You can apply to join my private group in there. So obviously, the big sell from Alex Karp there, right? Now, we could look at this a few ways, right? One is the company's getting the S&P 500, so why not go ahead and if you want to sell some shares of Palantir, want to go ahead and get rid of some now, right? When you're going into the S&P 500 and you open up a lot more shares for other folks to go ahead and buy out there, right? That's certainly a thing to do. Additionally, like, when would you rather sell your stock if you're going to sell your stock if you're an Alex Karp? When it's near all-time highs, or when the stock's crashing or you're in some bad market? I can be honest with you, like, it looks a lot better to sell when your stock's flying high. Like, technically, it never looks great if you're a CEO and you're selling a stock, but this happens all the time, like with basically every single company, right? But if you sell when your stock's crashing, let's say you're in a big downward trending market and you're selling your stock, it looks extra bad, right? Because it's like, here the stock is crashing and you decide to sell your stock, it looks really bad. If it's going up, everybody's making a bunch of money. I just think the optics of it looks a little better in theory, right? Plus, there's obviously a much bigger demand for Palantir stock. So that's something to kind of keep in mind there, right? Now, the other way you could look at this, okay, if we want to really look at this jaded, if we really want to look at this negative, you want to go really negative, let's go really negative. The really negative angle would be, Alex Karp looks at this, he says the valuation of the company doesn't make sense. And he says, like, you know, in his brain, he's like, you know, this doesn't make sense. We're not going to hit these sort of growth rates that investors are expecting. And so I need to get out. If we want to look at it very negative and jaded, that's definitely the way we can look at it. And that's certainly the way the bears are going to look at it, right? They're going to say, Alex Karp's selling because the valuation of stock's ridiculous and they're never going to be able to, you know, hit the sort of growth rates that people think they're going to hit, right? And they're also going to say, if Alex Karp really had confidence the company's going to get back to those 30% revenue growth rates that the company used to have, right, then he would have held his shares. So that's the way bears would look at it, right? Now, I thought Amit had an interesting take here. He says, Palantir is up 100% plus year to date. This is not because of memes, this is because of execution. When a stock surges this much in a year, people take profits. If the stock was up based upon pure speculation and no execution, that would be insider cashing out to cash out. When the CEO takes everyone along for the ride, aka helps everyone get rich, due to which certainly, you know, now we're up 300+% on the stock. I'm sure a lot of people are up 200, 300, 400% on the stock now. A lot of people are making a lot of money in regards to this one, right? Due to winning more deals and reaccelerating growth. I have no problem with them taking profits. 2, Alex Karp has vested these shares for decades. He deserves to get liquid. 3, these shares were exercised from stock options, which means you also have to sell to cover the taxes. These type of capital gains, the taxes are heavy, obviously. If we're talking about 300 million plus, yeah, it's a big tax number, right? 4, if you hate him selling so much, you can also sell. But if you have 5,000 shares compared to his 60 million, it might not make sense given the allocation sizing that someone like Karp has toward Palantir versus your stake. 5, finally, a sell at these levels is probably him saying that he thinks the stock is getting up there in valuation. Karp said a while back that sometimes the stock will be undervalued and overvalued, but he does believe the company can be 10 times bigger than it is now. If the market cap is willing to pay $80 billion for Palantir, if the market's willing to pay $80 billion, right? He thinks the valuation is stretched in managing risk. There's nothing wrong with that. And actually smart for a 56-year-old who's dedicated the last 25 years of his life to Palantir. However, this also doesn't mean the stock has to sell off based upon his selling if there's enough liquidity to absorb it. True. But it could also signal that the stock will consolidate here versus pushing forward for the next catalyst. My final 2 cents, this is not a big deal and quite frankly expected for someone who's been at the company for 20 plus years and had his stock go up 115% year to date. Anyone else in this situation would literally do the same thing. And if you really hate the move, you can sell a portion of your shares with Karp. Yeah, you could. You could sell 16% of your position or whatever, right? So, true, this person posted this here. It says, Karp sold millions of shares below $10. Karp sold millions of shares below $15. Karp is selling millions of shares this week at $35. Time and time again, the Palantir bears try to make sense of it. It's clear by now that these sales are effectively meaningless, engaging future price, right? And, you know, to kind of cap off this, I think something very important that everybody understands out there is let's think about the biggest, most powerful companies in the world, right? Who comes to mind when I say that? NVIDIA, Meta, Amazon, right? These sorts of companies. Apple, well, Steve Jobs sold Apple shares countless times over his tenure when he was at Apple or when he wasn't with Apple. If we think about, we can think about Microsoft. You don't think Steve Ballmer's ever sold shares of Microsoft, and Bill Gates? Of course they have, right? We think about NVIDIA and Jensen. Do you think Jensen's never sold any shares of NVIDIA stock over the years, right? We think about Meta. Zuckerberg certainly sells shares all the time in regards to Meta. Jeff Bezos always sells shares of Amazon. And look what ended up happening. I mean, ideally, those guys, all their net worths would have been higher if they had held all their shares. Honestly, it would have. Steve Jobs, if he would have obviously been able to live a full life, and if he never sold any of his Apple shares, he would have been by far and away the richest person. He would have been, in terms of like a percent of net worth, he would have been far richer than Elon Musk. He actually would have been, I've done the math before, he would have been up there with Rockefeller in terms of, you know, what he was in such a ridiculous sum of net worth. Steve Jobs would be like that today. I did math before, and it was something like $400 billion plus net worth Steve Jobs would have, right? But obviously he made decisions to sell shares countless times in regards to Apple, right? And then, you know, you look at all these guys. I mean, Elon Musk has sold a lot of shares of Tesla over time, and some of those shares sells by Elon Musk were at much lower prices than that stock is today. So it's a little food for thought in regards to this. Is just because somebody sells doesn't mean the company can't keep going up over time, right?